In today's video, I'm going to show you exactly how I'm trading the DXY, the Euro, the Pound, the dollar versus the Canadian dollar, and also gold for the week ending August 4th, 2023. Okay, so kicking things off with the DXY, the US dollar index, this is the 3-day time frame, and starting here with this time frame, we can see that the market is trading below this trend line that I've talked about off of this 2021 low. So we've got the low down here in 2021. We have two swing lows, two very prominent swing lows down here, followed by the breakdown below that area. However, since that time, like I've been saying in these videos, we have seen the DXY reclaim 100.8. And the reason that's significant is if we go to the daily time frame, you can see where this level was the previous year-to-date low for the DXY. So we've got 100.8 down here, and we've also got it right here on this low. So as of right now, this break that we saw here and the reclaim a couple of weeks ago, this right here was a significant development for the DXY, and it is why I was bullish last week. So I talked to members about this when the DXY was trading down here in this area on this pullback, and I said that this was not the time to get short on the dollar just because of that reclaim there at that level. So we've now had two weekly closes back above this 100.8 level, and it's why I continue to think that we are likely to see the DXY push higher, potentially a pullback first this week. But I do think that we are likely to see another run at 102 over the coming days and potentially that area up around 102.8. So you can see here that the weekly close back here, right? We got the close back above 100.8 here on the weekly. And then last week cleared that area right around 101.25. So as of right now, I am cautiously bullish on the DXY with those reclaims. And looking at the 4-hour time frame, this is what it's going to come down to in my opinion. So we've got this ascending channel that's developed off of these two lows down here, and we've also got these two highs. So this is why I think that we could see some consolidation from the DXY early this week. So potentially a move back up here toward this area, and then a pullback and some consolidation down here, and then maybe a retest over here in this area in early August, followed by that push back toward 102 and also the 102.8 level. So this area up here is going to be a confluence of resistance for the DXY. It's also fib confluence. So if you look at the Fibonacci's from two of these recent legs, there is a lot of confluence there at the 102.8 level. So that is kind of my target. And also the fact that we do have that intersection of these two trend lines that I just showed you. Okay, so these two trend lines also come in right there, right around the 103 area. So again, I do think for the DXY, as long as it's above this area down here, I am looking for higher back toward 102 and potentially 102.8. Alternatively though, if we were to see the DXY break below this area down here, especially 100.8, then that would be bearish for the dollar. Okay, so this area right down here is going to be a must hold for the DXY to the point where if we saw it rotate lower and then close below this area, okay, a sustained break below this region right here, right, that would confirm the breakdown and also expose areas like 100. But again, as of now, as long as the market is carving these higher highs and lows, then I am bullish on the dollar in the short term. Another reason that I am bullish on the dollar right now is the EURUSD chart. So this is something that I talked about last weekend. You can see that we do have this trend line down here off of these highs from last year. And this level, if we extend a parallel level up, you've got this high back here, this closing price, and also these three highs during this consolidation. Now, this right here was a fake out confirmed by this close. All right, so a fake out like this tends to trigger an extended move in the opposite direction. So for the EURUSD, that would be a move lower, and so far that's exactly what we've seen. Now, my target was hit at 1.095. This is the level that I also talked about last weekend. So you can see here that we do have an intersection between this short-term trend line and also this short-term trend line. Okay, so 109.50 was the support for the euro, and you can see we got a significant bounce here on Friday. So what I think we could see for the week ahead is potentially some consolidation here for the euro between these areas. So up here in this area, and then the support. So consolidation here, and then potentially a breakdown from this area. However, 109.50 is going to be the level to get below. We're going to have to get a sustained break below that to open up these lows down here around 108, 1.08. And also potentially the bottom of that channel right around 1.073. Now, alternatively, if we see the euro reclaim this area up here, so if it were to reclaim the area right around 1.11, all right, reclaim this, then we're looking at a move back here toward this resistance around 1.117 to 1.118. Okay, now let's take a look at the pound, which I don't really favor this nearly as much as other markets. right now, but you can see where we did have this fake out up here. And this is also something I talked about in the weekly forecast a few weeks ago. So we had the fake out up here. And if you drop down to the 4-hour time frame, you can especially see where we got the fake out back here. So this was the fake out, closed below, confirmed it, retest as resistance. So this is something I even talked about in the members area, talking about how this fake out right here could trigger that move lower down here towards some of these key support levels. So for the week ahead for the pound, it's going to be a matter of, can we see the market reclaim this level up here, okay, the bottom of this channel, or does this fake out up here, as they often do, trigger that extended move in the opposite direction? Remember, fake out to one side of a pattern, extended move in the opposite direction, and typically it doesn't stop here. So if this area holds, if we see the pound continue to be rejected from this area right around 1.285, then we could get that move down here toward these lows. Okay, this next little pivot right around 1.263. But like I said, I don't really favor this one as much as other markets. I don't think it's quite as clean, technically speaking. But again, if we do see a breakdown from this channel, then we could have that move down here toward this pivot right around 1.263. Now, alternatively, if we see the market reclaim this level up here and also take out 1.3, then that would be bullish toward these highs back here and also that 1.317 area. So next up, let's take a look at the dollar versus the Canadian dollar. And I absolutely love this chart. This has been my favorite chart, technically speaking, for quite a while. And you can see here, starting on the 2-week time frame, we've got this massive channel that has been intact since 2015. And we also know that the market is coming off of this support down here, carving higher highs and higher lows. So like I've said recently, this is why I have favor looking for longs at key support. However, the market has also been kind of difficult recently because it has been going sideways. However, if we drop down here to the daily time frame, you can see that first of all, the market is coming off of that trend line from down here in 2021 that I've talked about. So I've mentioned this in previous videos, and we can also see that the market is moving within this descending channel. So we've got the lows down here, right? We saw the bounce back in this area, the bounce right here at the 2021 trend line, and then also the top of this channel. So last week, what I was looking for, and I made a video about this when the market was consolidating back here, was I was looking for further consolidation within this potential ascending triangle, which is typically a bullish pattern. Okay, we've got this key level right here at 1.323. And then we also have these higher lows that have developed. So this right here does look relatively bullish. It looks like the market's trying to bottom. And right now you can see that the market did close above this on Friday. Now it was a Friday close, so you have to be careful with that, low volume. But if we see the market, continue to hold above this area next week, maybe a wick down here in this area to clear out some late longs. But if we see it continue to base above this area here, then it gives us that breakout that we're looking for and potentially that move back here toward 1.337. Now, here's what's really interesting about this, and I shared this with members last week. And by the way, since I'm on that topic, I did enter a long here at 1.3169. So right through this area, right here, I entered long on this candle. And I did share that with members too. So I'm in this long here. I will add to it if we get a sustained break above this area early next week. But let's go ahead and take a look at why the target is so interesting up here at 1.337. So the objective for a pattern like this, for an ascending triangle, you take the height of this pattern and extend it over from a potential breakout point, which so far we did potentially get on Friday. And you can see that our objective is right there at that recent high at 1.337. Okay, so the height of the pattern, take the same level, extend it over from the breakout point, and you get the target. So no guarantees, of course, there are never any guarantees. And as always, this is not financial advice. But I do think that if the dollar CAD can start to base above this area over here early next week, again, maybe a wick below here to take out some late longs. But if it can base above here, I think we are likely to get that move up toward 1.337. Alternatively, if we see it rotate lower again and break this trend line here, then that would potentially show weakness and expose some lower levels. All right, so last up we have gold, XAUUSD, and looking here at the 2-day time frame. So we've got this trend line that I've talked about here on YouTube off of this high from back here in 2022. We've got this confluence of support down here at 1900 where it bounced recently. I also made a video about this. And now we have this beautiful range that is set up between 1940 and 1980. So looking at the daily time frame, this is the level that I mentioned in last week's video. Okay, so I said that this price action right here looked like we might get a pullback toward 1940. Sure enough, we got the retest right off of 1980 and the retest very close to 1940 on Thursday. All right, so we talked about this in the members area, and it did play out really nicely. And by the way, if you are interested in joining our group, there is a link in the description here. And this is the last month, guys, that I'm going to offer it at this price for lifetime access. It's been at this price for a very long time now, but I'm starting to ramp up how much time I'm spending with members and also the benefits that I'm adding to that group. So it will be the last time to get in at this price. You've got literally 3 days left. So see the link in the description here on YouTube to join our trading group. Okay, so looking here at XAUUSD, we've got this range that has developed, and this is a case where really this is going to be a range-bound market until proven otherwise. We have key resistance up here at 1980, key support down at 1940. So this is not a case where you want to be trying to short down here or long up here. This is really just a case where you want to be trading this range until proven otherwise. Now, this could turn into an inverse head and shoulders where we've got the shoulder over here, the head, and then a right shoulder. But we do need a close above, a sustained break above 1980 to confirm that. And furthermore, the DXY and gold tend to be inversely correlated. So when we flip back to the DXY, right, we would have to see the DXY looking here at the 4-hour time frame close below that 100.8 level that I talked about. So we'd have to see something like this right through here to confirm higher for gold, because again, the two do move inversely to one another. So keep that in mind when you're trading gold, that the only way that we get a breakout up here and this turns into an inverse head and shoulders for a target up here in this area, the only way that happens is on a sustained break above 1980 and also with a DXY breaking back below 100.8. Okay, so for now, gold is just a range-bound market between these two levels. And if we were to get a sustained break back below 1940, all right, back below these lows back here, then that would open up the lows down here right around 1900. But for now, I think that this is a case though where you have to respect the range until proven otherwise. So again, 1940 is going to be key support and 1980 is resistance. All right, that's it for today's video. I hope it helped. Do me a favor and smash the like button and also subscribe to the channel and click that bell icon for notifications. And don't forget to join our trading group for a 60% discount. Last few days to do so. See the link in the description here on YouTube, or if you're on the website, click on that join today button and it will take you right to that page. Have a great rest of the weekend. Trade well next week, and I will talk to you again on Monday.